Did you know that a simple flower was responsible for one of the first major financial bubbles in history? We're talking about the Tulip Mania, a phenomenon that occurred in the 17th century in the Netherlands, and in many ways, it mirrors the financial speculations we see today. But what really happened back then? How did something as simple as a tulip bulb manage to shake the economy of an entire country? In this video, we're going to explore this fascinating story and, more importantly, uncover the lessons it still teaches us about investing in today's world. Stick with me, because what you're about to learn could change how you approach financial markets. Now, you might be thinking, a flower causing a financial crisis? That sounds crazy. But what if I told you that the same kind of behavior, driven by irrational exuberance and fear of missing out, still happens in today's markets? From cryptocurrency to real estate bubbles, history has a way of repeating itself. In fact, the Tulip Mania of the 1600s is often cited as the first major example of a financial bubble, where prices inflated far beyond the actual value of the asset. It's easy to get caught up in the excitement of rising markets, but without understanding the risks, we might end up making the same mistakes as those early investors. The key to becoming a successful investor is learning from history. So, let's take a closer look at how the Tulip Mania unfolded and why it serves as such a powerful warning for us today. Today, we're going to break down the key elements of the Tulip Mania story, the economic context of the Netherlands in the 1600s, how tulips became the symbol of wealth and status, the peak of the speculative frenzy, and ultimately, the collapse that followed. Along the way, we'll explore how these events shaped modern financial markets and offer valuable lessons for investors. By understanding the rise and fall of the tulip market, you'll gain insights into the dangers of overspeculation, the importance of rational decision-making, and how to spot the warning signs of a bubble before it bursts. To fully understand the Tulip Mania, we need to take a step back and look at the economic landscape of the Netherlands in the 1600s. At this time, the country was one of the wealthiest and most influential in the world. Amsterdam, in particular, was a hub for trade and finance, and the Dutch East India Company was making huge profits by trading goods across the globe. The Netherlands had established one of the first modern stock exchanges, and the people were becoming increasingly involved in financial markets. This booming economy created an environment where people had disposable income and were eager to invest. However, this also led to an increasing appetite for speculative investments. As the Dutch economy flourished, so did a sense of opportunity, and that's where the tulips entered the scene, soon to become the latest and most exciting way for people to show off their wealth. So, why tulips? It all began when these exotic flowers, native to the Ottoman Empire, were introduced to Europe in the late 1500s. Their vivid colors and unique patterns quickly captured the imagination of the wealthy Dutch. By the early 1600s, owning rare and beautiful tulips became a status symbol, a way for people to display their wealth and sophistication. Tulips, especially those with unique color variations caused by a virus, known as broken tulips, were seen as rare and incredibly valuable. As their desirability grew, so did the prices, and what was once a simple flower became a must-have item for anyone wanting to flaunt their success. But here's the catch: while tulips were becoming increasingly expensive, they weren't valuable because of their practical use or beauty alone. They were valued because everyone believed they could sell them for even more. It became less about the flower itself and more about the speculative game of trading them. As tulips became a symbol of wealth and status, the Dutch market went into full speculative frenzy. People from all walks of life were jumping in, believing that the prices would only keep rising. Tulip trading became so popular that it was no longer just the wealthy elite involved. Middle-class citizens, merchants, and even farmers were getting in on the action. Entire families were selling their property, including homes and land, just to own a single tulip bulb. The idea was simple: buy low, sell high, and make a quick profit. As more people bought into the market, prices soared. By 1637, the most prized tulip bulbs were trading for tens of thousands of guilders, a price far higher than the average person's annual salary. In fact, some rare bulbs were said to be worth more than a house in Amsterdam. The tulip market became its own self-sustaining cycle of speculation. Everyone assumed the prices would keep climbing, and no one wanted to be left out of the potential wealth. But like all bubbles, it was built on an unstable foundation. The tulips had no real intrinsic value. The market wasn't driven by demand for the flowers, but by pure speculation. But, as you can probably guess, this couldn't last forever. In early 1637, the tulip market suddenly began to crash. It all started with a single auction. A buyer failed to show up to buy a rare tulip bulb, and panic began to set in. people realized that the prices were artificially inflated and that the tulips themselves held no real value beyond what people were willing to pay for them. As the panic spread, people rushed to sell their tulips before the prices dropped even further. Within weeks, the tulip market completely collapsed. The once prized bulbs were now worth only a fraction of their former price, leaving thousands of investors bankrupt. The economic impact was severe. Many who had put their life savings into tulips faced financial ruin. The market crash wiped out fortunes, and the Dutch economy suffered a temporary setback, though it eventually recovered. The fallout from the Tulip Mania serves as a powerful reminder of the dangers of speculative investing and the inevitability of market corrections. When the excitement fades, the true value, or lack thereof, becomes glaringly obvious. Now, while the story of the Tulip Mania is often told as a dramatic tale of financial ruin, it's important to take a closer look at the myths surrounding it. In modern times, this event is sometimes exaggerated as the Dutch economy being entirely destroyed or as the cause of a nationwide collapse. In reality, the tulip crash didn't bring down the entire Dutch economy, although it did have a significant impact on those who were heavily invested. Studies have shown that only a small fraction of the population was involved in tulip speculation, and the total value of tulip contracts was not enough to trigger a full-scale economic collapse. Instead, it was more of a financial blip that lasted a few months. However, the psychological impact of the event was profound. It became one of the first instances where speculative behavior was clearly linked to market instability. So, while the damage was not as catastrophic as legend suggests, the lessons learned from Tulip Mania continue to resonate in modern investing, reminding us of the dangers of bubbles and the importance of maintaining a rational approach to investment. The Tulip Mania offers us a crucial lesson in the dangers of unchecked speculation. It's easy to get swept up in the excitement of a rising market, especially when everyone around you is making money. But just like the investors in the 17th century, we must remember that no market goes up forever. The key to successful investing isn't to chase after the next big thing or to make quick profits based on hype. It's about making informed, rational decisions that will serve you in the long term. The best investors are those who maintain a level head, do their research, and don't let emotions dictate their financial choices. So, as you move forward with your own investments, think about this. Are you following a trend because it makes sense, or because everyone else is doing it? Remember, it's not how much you earn, but how wisely you manage and invest what you have that will make the difference in the long run. I hope the story of Tulip Mania has given you some valuable insights into the nature of financial bubbles and the importance of making rational investment choices. If you found this video useful, don't forget to give it a thumbs up and share it with anyone who could benefit from these lessons. Also, make sure to subscribe to the channel for more in-depth financial insights and strategies that can help you navigate today's markets. I'd love to hear from you. Leave a comment below with your thoughts on Tulip Mania, or share a time when you've seen a speculative bubble in action. Remember, the journey to financial wisdom starts with understanding the past, and today, you've taken a big step forward. Keep learning, keep investing wisely, and as always, keep striving for financial freedom.